As we entered the new year, I was certain that the market was going to take a large dip after it ran up through November and December, and then Wall Street would bring it down so that they could recalibrate their books and make the market profitable for them in 2024. So I put in some stop loss orders, and here's what happened. I got stopped out on Microsoft, and then it turned around and shot up. The same thing happened with NVIDIA. I missed out on that surge. Meta, again, I stopped out. Super micro computers, something I had good profit in, but I got stopped out. And then Google, the same thing. So I was feeling a little discouraged, and maybe that I had misread the market. But then I listened to the earnings call from Air Systems, and they explained to me that the market is slowing down because EVs aren't selling. And then last night I watched 60 Minutes, and I determined I did the right thing. I will be able to buy those 5 stocks and many more at deep discount. Watch this.
Looking for signs the U.S. economy can continue to stave off a recession? Avert your gaze from commercial real estate. City office buildings are in trouble. For a century, the towers have been propped up by 2 pillars. 1, workers filling the buildings all week. 2, money flowing freely in the form of loans to borrow, buy, and build. Those days are over. As hybrid work hardens from trend to new normal, office occupancy rates have hit all-time lows. Meanwhile, interest rates have spiked to historic highs, and now the mortgage comes due. $1.5 trillion in commercial real estate loans expire in the next 2 years. What is New York City without its skyline? Monuments to commerce standing proudly shoulder to shoulder. More office space than any city in the world. But peek inside all this vertical real estate, and there's a fundamental question. Where is everyone? More than 95 million square feet of New York office space currently unoccupied. Commercial real estate is a world built on loans, big ones, and the assumption that those loans will be refinanced with little friction every 5 to 10 years. Not anymore.
The bank will look at that building and say, well, I used to be willing to lend you $80 million against this building, but I don't think that building is worth as much anymore as it used to be. So maybe today I'm only willing to lend you $60 million against that same building, right? And now the office owner,
They got a choice to make.
Do I come out of pocket for that $20 million difference, or do I walk away?
The rubber meets the road when it comes time to refinance.
Right. And to make matters worse, interest rates are now much higher. Interest rates have essentially doubled, so the cost of that new mortgage, even if you can get one, will be much higher.
What happens when that cost becomes too high?
Pursuant to the terms of sale.
On the lawn in front of a Manhattan courthouse, we saw something you won't see on a double-decker bus tour. A mortgage foreclosure on an office building.
10 million going once, 10 million going twice.
Here, no one in the crowd is willing to outbid the bank holding the loan on the building. And if the bank rep doesn't look thrilled, it's because he has an empty office building dragging down his balance sheet.
So commercial real estate is a huge part of the book of business of your typical bank. And I'm talking mostly about these smaller and medium-sized, maybe regional banks. They have a lot of exposure. That is their bread and butter activity. About 30% of all their loans are commercial real estate loans. And here we are sort of seeing weakness in office that is something like that we have never seen before. And banks need to come to grips with that.
Are you comfortable calling this a crisis?
I think we're at the beginning. There's a potential crisis here.
In December, nationwide office loan delinquency rates crowded 6%, almost 4 times what they were a year ago. But banks have been reluctant to write down those losses. Enter David Averam from Maverick Real Estate, a firm he and his partner founded after the 2008 financial crisis. Their specialty? Buying distressed debt on the cheap. Averam keeps tabs on the debt on every office building in the city. He says New York is awash in billions worth of commercial real estate loans at risk of not being paid.
We know that there's this buildup of bad debt in the system, but it's not being dealt with just yet. And it's in large part because the banks have been kicking the can down the road as best they can, trying to push this off as far as they can.
What does that mean?
It means that banks are entering into extensions on a lot of their bad loans, which essentially change their classification from a non-performing loan, a loan that's in distress, to a performing loan, a healthy loan, even though they haven't received a pay down on the loan and the collateral value on that loan continues to drop.
Extend and pretend.
That's right. And it works really well when interest rates are low because the banks can just keep the status quo going. But once rates are high, it doesn't really work anymore.
A downturn in real estate made worse by bad loans, contaminating banks and potentially the entire economy. Echoes of the global financial crisis of 2008 are hard to ignore. But whether the trouble with office buildings ends in a simple pricing correction or becomes a systemic crisis, likely there's pain coming, not just for building owners and banks, but for cities themselves.
In the long run, property taxes on those buildings will also fall by 40%. And these commercial property tax revenues are an important component of the budget of local governments, which means less money for police departments, trash collection, and some people are going to decide that, the quality of life has deteriorated too much and they want out. And in fact, that's what we've seen. In the last 3 years, our largest 10 cities have lost about 2 million residents.
You're losing that tax base as well.
And now you're losing that tax base. And now this cycle continues. And we end up in something that we have called an urban doom loop.
It's awfully quiet around here.
The urban doom loop sounds scary, and it's making the rounds, threatening cities beyond New York, Dallas, Chicago, to say nothing of San Francisco.
Best of Us Investors presents Kerry Griegmeyer.
So, did I miss out? Or am I just a little ahead of the game? I tend to think I'm ahead of the game. I tend to think that there is a dip, a crash, whatever you want to call it, coming. Because we have to reckon this. Elon Musk said that in his earnings call, we're not selling more cars because cars cost more than they did, even though he's reducing price because interest rates have doubled. Well, the same thing is happening in our real estate markets. San Francisco, I was there, I guess, maybe 10 years ago. It's not the same city. New York City's not the same city. We've got the same thing going on in Birmingham, Alabama. There are restaurants that are closing. Our Wendy's is part of a franchise of 350 Wendy's that have closed. We're seeing Amazon laying off people. We're seeing Google laying off people. We are ready for a new recession. We are ready, as they told me, for another banking crisis. That the regional banks, and if you deal with a regional bank, you best look them up and find out what their financial structure is going to bring this market down. And so what the work that I have done in the last 4 months of figuring out where is the support level on Amazon, on Google, on super macro computers, the work that I've put into my cheat sheet where I show you what the price is now, what the price potential is maybe by the end of 2024. But first, we've got to get through this financial crisis that is coming at us from all different directions, and we will see, I believe, the first canary in the coal mine. I believe we saw it in Air Systems testings, and where their CEO told us the EV market has brought down the semiconductor market. Well, if the semiconductor market is down, so is the tech market and everything that I got stopped out of. I believe I will have a buying opportunity. I believe I know where the support levels are. I know also where the resistance levels are because I've done the study. I've looked at their projections for future earnings per share, and I know who and where to buy. I feel a lot better. Thank you, 60 Minutes, for kind of restoring my confidence in my ability to read markets that I've been involved in for many years and not get caught up in this bubble. I've experienced it. I experienced the dot-com bubble. I saw Amazon go from $99 a share to $9.75 a share, and then I saw it come back. But I wasn't smart enough back then to figure out and create a cheat sheet to tell me that Amazon's going from 99 to 9.75. I figured it out this time. I want to share it with you. I want to share all the research that I've done, all the experience that I've had. So I want you to get on the bus. I want you to come to bestofusinvestors.com and access our information. Now, how do you make money when this thing is dropping? You do swing trading. Over the last year, we've built a swing trading program by Mark Willett, who works for us, and he has a 87% success ratio. He basically created a system that last year gave you a 80% return on your investments. Come learn about it and become a wise investor. Start making some intelligent investment decisions. I'd like to help you. You just need to get on the bus.